how should we start this off, Max? You want to start it off with Apple versus Square?
Yeah. Did we touch on that a little bit last week?
A little bit, but the
I
payment
remember.
terminals weren't confirmed yet. But your dad did send you an article about how they were going to turn iPhones into payment terminals.
Did I share that with you or no?
Yeah, you did. You did, but it wasn't confirmed that Apple was doing it. But they just
now
came
they
out.
are.
Now they are. And it just does it make Square their payment terminal obsolete and like not needed now?
Okay, I remember that. Yeah, you sent this a little bit during the week. I don't know. I said a buyout would happen, but you guys seem to say no right off the bat, which I didn't understand as why it was like such a hard no.
Well,
like Apple buying Square because they already have the technology, but it was just a thought. But you guys seem to be like, no, that's not happening.
Yeah, because why would Apple buy Square when they arguably made something better than Square's product?
The only thing I was thinking of is, they did make a better product, but Square has they built their whole entire company around the technology. They have a lot of data. They have a lot of people's information. I would say the reason I said it is because it was like basically buying people's data. Like they have all that stored somewhere,
like they already have the infrastructure in place.
Yeah, the infrastructure, and then people's like where people are using it, how many uses, frequency, all that kind of stuff. I was just thinking about buying information. So it's like it can help Apple further their better version of Square.
Yeah, but what's Square's market cap? Is it like 50, 60 billion?
No, I don't know off the top of my head.
Square is worth
be a lot.
Yeah, $62 billion. So would it be worth Apple paying 62 billion for Square when in reality there's like over 400 million people using Apple Pay, so they already have all of this data and stuff. So
that is true. Then I see why you said no.
Yeah.
I mean, they basically made a better product of it, and they have links between each other's iPhones already. Like it's just like, why wouldn't you? The only reason I'd say no is because not everyone has an iPhone. I'd say like a lot of people do, but not everyone has an iPhone.
Is that why they're quote unquote turning it into a payment terminal? Because can't you already do that with Apple Pay, like transfer money between users with iPhones?
Yeah, now it's just like you're just tapping the phone. Do it. Yeah, you're just tapping
with
the
any
phone.
That's pretty sick.
Yeah.
Wait, with any phone or just Apple products?
I think it's just Apple.
See, like that's what I was saying. Isn't that already a thing with Apple Pay? Or you're just saying now it'd be even easier?
Well, now you don't have to send a message. Now you just literally tap the phone and it's done. Hey, I've always thought of something. I've always thought at some point Apple is gonna they're gonna create a feature to where you can send someone like battery. So if I'm on 20% and Logan's on 100%, Logan can like send me 20% battery. I feel like they're gonna come up with that soon.
That would be sick.
Yeah, well, they already have like cable-free charging. You just lay it on top of it. So I don't know.
That's
why
what I'm saying. If you can send money, via text, why can't you send battery via text?
That's how electricity works.
I don't know. I just think you'll be able to like input it.
Time out.
I just think you'll
totally
be able
different.
No, the way you
it'd be cool if you were able to like stack the phones on top of each other, and then with the top phone,
that would be it.
Say, like send this percentage of battery to them, and then it would like somehow transfer it. But you'd need like cables or them touching. You can just do it through the fucking air.
Yeah,
true.
that'd be pretty nuts. Just shooting battery.
Charge.
At some point. At some point it'll happen.
Coming out.
At some point it'll happen. There's no
I'm
doubt.
sure, yeah. In
Wouldn't
like 30 years, yeah. You're gonna have lightsabers in fucking 30 years.
Yeah, dude. It's gonna be incredible.
All right, Max. Transition to EMT. Let me hear it.
All right, so we talked about this a little bit last week.
First, explain it a little bit.
Yeah. I'm gonna read the exact definition. Okay. Efficient market. Hypothesis, theory, same thing. Yeah. Okay. Are we ready? The efficient market hypothesis, aka the theory, it's the same thing, is a hypothesis in financial economics that states that asset prices reflect all available information, right? What that means pretty much is people are making rational decisions because they know, like everybody, like us three, if we make a trade, we all have the same exact information and are on the same page of which way, like buying or selling. Does that make sense?
Yeah. Does it make sense to you, Logan? I already know this theory. I just want to make sure you know what he's talking about.
Are you saying like everyone has access to the same information if they wanted it?
Yeah, like everybody has the same exact knowledge. Like it's not like when Wall Street Bets was happening, it's not like there was guys out there who were,
unless you're a senator, right?
Well, I mean,
the majority.
Okay,
He's talking about the masses.
Yeah,
the masses.
yeah,
the
masses.
Yeah.
Right.
Like the market moves because everybody in the market has the same knowledge and is making the same decisions, which excludes like what was happening like with Wall Street Bets when all that stuff was going on, when kids were coming into the market being like, I know this, and this, and really they got into it last week, you know. Right. It basically, yeah. So it's basically saying the market moves on, which is not true. It's not true, which is really weird because in all finance classes, they teach you this theory as if it's some kind of, it's like the Bible of the market, basically. Yeah. It's just how it moves. And it's like law and God. And so I was in class the other day in one of my finance classes, and some kid asked the professor, well, if like the efficient market theory is true, we were talking about beating the market, and our teacher is basically saying like analysts and all that kind of stuff and money managers, it's like they can beat the market, but it's very hard to replicate that over and over, and it's like it's not really going to happen that often, and you're going to lose way more times than you win. So basically, like the market always wins. The indexes will always yield more returns than us going out there and being like, I can beat the market, and I'm going to bet over better returns in the market. Yeah, because like we could beat it this year, like right, but it's going to be hard to replicate that every year. Okay. Which, and so one of the kids asked, like, well, why is finance an industry? Which is kind of interesting because we're all finance majors looking to become or to join the like finance industry, right, which was, I mean, it was interesting though, because it's like, my teacher was like, well, I asked that exact same thing because he managed some money at Atlanta Capital, which I guess is some big firm around here. And he asked his boss, which is like the head CFO of the whole entire thing. And he was like, why is this even an industry? We're not going to beat, like, basically we're not going to beat the market. Like, it's just not going to happen. And the guy answered, because people want to believe. And that was like his best answer. He was like, people just want to believe that somebody can beat it, so they're going to put their faith in somebody. It's almost like gambling, like betting, which I thought was so interesting, because it's like, how is this whole entire thing that the world revolves around? I mean, not like, essentially it's not even a thing. Like, it's just right, because no one's going to actually win and beat the market.
I think it kind of goes back to what I said at the beginning, where I said I feel like I'm a smart guy, but when it comes to stocks, I kind of feel retarded sometimes. I think it cuts that out, and it's like you give your money to someone else who quote unquote like knows what they're doing. So it kind of like takes you out of that, and you're like, I don't want to deal with it. You do it. I think that might be a big reason too.
Well, I'm not going to explain this very well because I didn't fully understand it, but he was talking about, again, EMT, or like efficient market hypothesis. And he was saying like, it's a paradox. Like, you need it because, oh God, if it wasn't there, people would just shoot up. It was like GME. People would just pump their money into, he said valuation wouldn't be a thing. There'd be no such thing as valuation, because people would make irrational decisions and pump up GME that's not even, has zero value, you know, like it's a dying company, it has nothing to grow on. So he's like, if it wasn't a thing, people would just shoot up random stocks. Everyone would be on the same page and just be like, we're going to pump this one, we're going to pump that one. And then you need it because if people only followed the indexes, like I don't know. God damn it. It's so hard to explain. Do you see where I'm coming from or no?
A bit, yeah.
I know your explanation, but I'm not getting the paradox thing.
It's like the market exists because of it, and it exists because of the market. Kind of.
Yeah, they're like one and the same. Without one, it's like you need it, but it contradicts at the same times. Certain stocks would explode if you didn't have it, and then because it's there. Like,
so you're saying the market needs efficient market theory, or what?
I think they were saying yes, that they need it because fuck. That was confusing as shit. Now that I'm looking back on it, it was I literally wrote it all down. And in class, I was like, damn it, we should have recorded that day.
The person, there's a book called A Random Walk Down Wall Street by Burton something, and he wrote about the efficient market theory, and he tried to explain exactly what you said, Max, like why. Did you guys hear that?
It's not that loud, but yeah.
Okay, good.
What was that?
So that's Frankie letting his fucking anyways, he tried to explain that people that do beat the market, it's random. And for the most part, most investors do underperform the market. Like, that's true. That part is very true. But
which is interesting that finance is even a thing.
Yeah, so that part is true. Most investors do underperform the market, and that's why index funds are a thing. But he tried to explain why Warren Buffett was a lucky monkey, as in he beats it by randomness and by luck. And Buffett came back and said, if a bunch of monkeys from the same zoo, meaning like from the same school, they all learn from the same teacher, beat the market, then it's not random. Does that make sense? Like Buffett learned from Benjamin Graham. I'm not going to get into this too much, but Buffett learned from Benjamin Graham, and a bunch of people learn from Buffett. And if they all use the same technique and the same skills, and they invest the same way, and they all beat the market, then it's not random. That's what Buffett came back and said.
That's what I was.
I'm looking it up right now. Go for it.
I was kind of wondering the same thing. If the market wins out in the long run every single time, why wouldn't everyone just do the index funds and just go with basically whatever the market's doing? And like, why would a value investor even be a thing?
Right.
Like valuing companies and shit.
I think that was the paradox. If everyone just went to the index fund, then you wouldn't be able to find underpriced things. Like everything would be valued correctly. And there would be no market. It'd just move at a steady 7% every single year.
Yeah, that's the thing. It's value equals price. There is no mispricings with that theory. And like Max said, I don't believe it's true, but that's what they teach in school. And also at the same time, why is there a finance class if you're supposed to just put your money into the market and do an index?
Right, exactly. It was some big contradiction. And okay, so it says Grossman Stiglitz paradox. I don't know if I'm saying Stiglitz right. Sounds German. Argues perfectly efficient markets are impossible, since if prices perfectly reflected all available information, there is no point to gathering information, in which case there would be little to no reason to trade, and markets would eventually collapse. Does that make any more sense?
Yeah, for sure. And there's so many examples of why this isn't a thing. For one example, like you said, Max, GameStop, value did not equal price with GameStop. GameStop was at 500 a share. Right. And you're not going to tell me that was the value of
price.
GameStop. And another example, last week or a couple of weeks ago, Facebook had a bad earnings call and the market decided to take away a quarter of its value. Like that.
Like you need irrational traders and investors to even make the market a thing.
I agree.
You know what I'm saying? Like
it's almost like the lottery. It's like someone will win for sure, and they'll win big. They'll go up like 5,000%. But then you'll have the guys who lose consistently over and over again. And I think going for that big win is kind of what keeps it afloat.
Yeah, I don't know. You need, like we were saying, you need irrational people to be in there, because if not, it would just collapse. It would, like, the market wouldn't be a thing.
You need irrational people also to find buying opportunities and selling opportunities.
Yeah.
Like I always talk down and talk shit about people that are acting irrational, but if there were none, then I wouldn't be able to, there'd be no reason for me to buy stocks or value stocks.
Right, because value wouldn't be a thing. They'd be priced perfectly. And then going back to like GameStop, when you're selling at 500 because you know there's no value, somebody else out there is like,
buying.
oh hell yeah, like
Exactly.
this is the perfect price for this company that is non-existent now.
Yeah,
like it's I don't know, I explained it kind of shitty, but I was in class, like my head was exploding because I was like, whoa, it's just like
that makes
a
sense.
contradiction. You can't I don't know. Yeah.
Thanks.
That's how I feel. That's how I feel.
Food for
This is how I
thought,
am in some of these
viewers.
finance classes. Yeah, it's just like, oh god, this I thought it was interesting. Just
Logan, you have
piece of
something
shares.
to talk about? What was the third thing on our list?
Third thing on my list?
No, the list for the podcast. Did you have something
You
to say?
said no, I was interested in the Square thing.
Oh yeah,
I didn't
no,
like
Square. They're transitioning to blockchain because they know they can't compete with Apple.
Yeah, right.
Yeah. Hey, I went
As
to
they
Barnes
should.
and Noble. I went to Barnes and Noble yesterday while Kylie walked around and shopped, and I read The Future of. There's a book called The Future of Money, and I was trying to read it to get into blockchain and crypto and all that shit. So the amount of pages I read in that short amount of time was actually like a record for me because it was really interesting, but it all came down to the same point. It's just more secure. That's all blockchain is. It's all about security. That's what I got from that book. It's all about
like verifiable.
Yeah, yeah.
There's no way to counterfeit it and all that shit. Yeah.
I don't know. I'm gonna buy the book to read all of it. But from what I read that explained
What's it called?
blockchain, it's called The Future of Money.
Future of Money.
Yeah.
I guess it eliminates like money laundering and all these kind of fraud type things.
Yeah, but you can get hacked. How many times do you see crypto whatever hacked? You know what I mean?
I don't know if you'll ever be able to round getting hackers. I mean, if for like Logan's makes a career out of coding. Like for every code there is there not a way to break that or loophole to get into that code, aka hacking?
Yeah, I'm sure there is. Like a lot of companies, like you have to update security shit all the time because there's always new security problems coming out. So it's kind of like a constant war. It's like you have the people trying to break security and then you have security trying to keep up.
It's just, I mean, because what Jared was saying is that blockchain is it's all about security, but there's always going to be a way to hack into it.
Yeah, I think there will be like someone would have to be brilliant to do it, but I think, yeah, given enough time and that's all you worked on, absolutely.
Technically it's possible.
Yeah.
Yeah, and with these supercomputers and shit. I guess it's more of the reason for it is the traceability, and
it's all public.
Can just track where everything is going. Yeah, and we talked about this before. It eliminates like any kind of like mediator. Like it eliminates the bank basically. It's just straight me to you instead of me to bank to you.
But the bank also, but the banks also insure your money. Like that's
you talking about like not blockchain? Yeah.
FDIC.
Okay,
yeah. And there's no insurance on your personal wallet because you're your own bank. So if you lose, like we've talked about this before, people lose their keys and then they lose their money.
Yeah, that is true. But the funny thing, it's another contradiction because people are going to want security on it.
Forgot password.
Yeah, right. But people are going to want like FDIC on blockchain, but to have FDIC on blockchain, you need a third party.
Exactly.
So then it's like right back to
square one.
The contradicting.
There's a lot of contradicting.
My brain's
going
to hurt.
Episode.
People love it.
Brain's going to hurt after this one. It's a paradox. Yeah. It's the blockchain paradox. We just made that as a new theory. Write that up on Wikipedia.
Jared, is it
I don't know. Are you saying you prefer it or don't?
How the digital revolution is transforming currencies and
Yes,
finance?
sir. That's the one.
Okay.
I was just sitting in a chair in Barnes and Noble.
Are you saying you prefer it, or do you think it's dumb?
I think so. I understand blockchain, but also crypto in itself is kind of contradicting itself because it's not decentralized. Well, there's so many, I don't know. There's so many coins that do fuck all that it's kind of making a mockery out of crypto. And you see a lot of people
Right.
that are like big into crypto getting pissed off at these shit coins. But until that's how decentralization works though. Like if you can just make shit and profit off shit, that it's gonna happen.
Yeah, of course.
So it's kind of fighting itself right now. It's kind of biting itself in the ass.
That's what I don't understand. Is so anyone could make a coin and then just make money out of nowhere off of it. Like it just has value now.
Yes. And you can just completely scam other people. That's what you're seeing with all these influencers. Or buy this and they got the coins for free. The coin starts trading and then they sell everything. It just doesn't. So that's what you get. That's what you're going to get until regulation happens. But then once regulation happens,
it's the whole point of crypto. Yeah.
Exactly. It doesn't make it's such a weird paradox thing. What's the point?
It's funny because I was at the park the other day, and this goes into like NFTs, and there was a dude in a really nice car, like all souped up with a spoiler, this, that, and the other thing, and his license plate just read NFT. Oh, and I was like, well, shit, what do you think? What do you think bought that car? I don't know. It is people making an incredible amount of money. I feel like fundamentally it's a good idea, but like you were saying, it's like people have exploited it so much and made so many shit coins that like the people that are actually about it are like, well, now we just look like clowns. Like
the people that are actually the people that are actually about it aren't flipping NFTs or trading in and out of cryptocurrency. The people that are actually about it are like staying in it.
Right. I mean, yeah, and I
could see him trading NFTs because it uses Ethereum as like the backbone. Yeah. So it's kind of like
enough about it. I've stayed away from NFTs.
It's fucking crazy.
They're confusing.
They're too confusing.
Dude, I feel like he bought that car from it, like from an NFT flip of whatever it is. And it's crazy how random people are just. It's like the movie Sure, the CEOs or whatever. People are just making money off of random things, just making things up, bets on bets, basically. Yeah. It's like, let's just see how many different ways we can make money. Oh, let me make a coin now. Doesn't make any sense. Good for them. They're making money. Maybe we're just bitching because we're mad, you know?
Because I didn't get a nice ass car from an NFT.
I'm driving my Honda Civic. Like I'm driving my Honda Civic that hit a rock the other day in the road and the whole bottom is fucking torn off. So I had to zip tie it all together. And like, that's what I'm driving. And this dude's driving a sick ass car with spoilers because of an NFT.
Logan, did you understand our explanation of the 10-year yield?
Yeah, slightly. I didn't get one part where he said, Max said like, if for example, it's at 2% now, and you buy, like you invest in one, and then in 10 years, he was like, if it's higher, it'll like drop back down to what it was. I didn't get that part. Does that ring a bell?
What, Maxwell?
I think that's how it works, because if it didn't drop back down to what you originally bought it, it wouldn't be risk-free. And it is a risk-free rate. And I remember something about like, it's like duration and all this. You know what I'm saying? Like it wouldn't be risk-free if you bought it at 2%. And then at the end of the 10 years, it went down to 1%.
You buy a 2% bond, you get 2% till it matures. Nice. You're locked in at 2%. Yeah, pretty much.
Is there any way to sell it early? Like say it goes up to 2.5 or 3%. You're like, fuck that. I want another one.
Exactly. That's why you see them keep going up and up and up. Because it moves inversely. If there's a sell-off in bonds, Logan, the yield goes up because it's like begging, it's like bribing you, like, hey, I'm at 2.5% now, buy me. And then when you see a drop, that's when people are piling into them.
Oh, I see.
So people are betting on People are betting on it to go
because
up.
they wouldn't give you a huge return on it if a ton of people are buying it, because that means they have to dish out a shit ton of money.
People are betting on the rates to continue to rise. That's why you see that thing flying. And they want, like you said, a better return.
So they're selling?
Yeah, they're selling. That's why it's
and
skyrocketing.
People are buying. Okay.
Yeah.
Gotcha.
Yeah. Yep.
We've got 3.5 left.
I know I'm gonna try to squeeze this in. And it works with stocks because if rates are at 1%, I'm basically willing to pay anything for a stock, which means I'll pay more and more and more. But if rates go up to 4 or 5%, then I'll think harder about where I'm gonna put my money. Like I'm not going to put my money into a high flying, no earnings making tech stock that, you know what I mean?
Yeah.
With the 108 PE. I'm not going to do that.
Sounds good.
Yeah.
I thought that's why the market moved the way it did last week, is because of rates.
It had something to do with it.
It had something to do with it. Mixture of the two.
That
I didn't know we were going to war.
Possible World War III.
That's a big part too. Yeah.
Oh, that whole thing.
Did you guys see my text about the listeners?
Yeah, doubled again.
That's like 2 or 3 weeks in a row. It went from 15 to 30 and 30 to 67.
We're expecting 120 next time. So
I know it's a compounding effect.
Yeah, right.
Exponential.
Yeah.
Wait, what is a unique listener? Is that someone new?
It's just the different
non-repeated, I think.
Yeah, the different types of people, like different IP address, I think it defines it as.
Yeah. Like I think if one person on the same phone watched it 4 times, it would only count it once.
Yeah.
Oh. So it's like a lot of different people watching.
It's a lot of people. Yeah.
Yeah. So tell your
moms,
guys. Tell your dads, your brothers, your sisters. Moms.
Listen to the podcast. Audio version.
Listen to Bearish.
That was episode 47. Thank you guys for listening. We're trying to double our viewers. Listen on anywhere you get your podcast, Apple Podcast, Spotify Podcast. I don't know the other ones.
Just YouTube, man. There's a lot of them.
And YouTube. And there's a lot of us. And you can see our faces. Okay, bye. Thanks for listening.